in Nicaragua, my mom, my dad, and my sister, there was no education on credit finances. I remember my mother trying to purchase a home later on, for my sister and I, after my dad went back to Nicaragua, and she kept going back to her bank. She got her little check that she got every 2 weeks, deposited, used her little credit card, next 2 weeks, and then deposit the money. So she thought that she was working the credit that way. Because she was asking the bankers, I want to purchase a home. And that's what they told her. Do step A, do step B, and you'll get credit. So then my mother goes and applies for a mortgage with the bank. The bank wants her credit, and they tell her, you have no credit. And she said, what do you mean? I'm confused. She said, you told me to come to the bank, deposit my check, and use this plastic card, right? A credit card. It was a debit card. And if you guys know that, we go to the same bank, we want to talk to the same person all the time. So, if Claudia came back, we wait 2 hours to see Claudia. Well, Claudia was not advising her the right way. Then, when I started working in the automotive industry, I started seeing a gigantic discrepancy on people purchasing automobiles. 2 different families buying the same automobile, but one family paying a lot less, and another family paying a lot more. And when I started realizing what was the reason, it was the credit. The credit is poor, now you have to charge them more interest. So I was like, how can these people get out of that hole if no one teaches you? And ladies and gentlemen, the disgusting part about this is that there's no education about credit finances for one reason. The United States of America runs on debt. The more debt we are in, the more money they make. The more debt we have, you see those highlights, we pay for that. Because we're paying interest, we're overpaying. And these people are getting really fast at your pockets. So my passion is to teach everyone how to leverage their income and their credit so that they can save money. So today, for the mortgage brokers, for the realtors, I'm going to teach you guys how able to help out your customers achieve that goal within 90 days or less. Because when they go and apply for a mortgage, right, the market is hot right now. There's no time to be waiting. So that pipeline that you have, it needs to come to fruition. If not, the market gets not cold, it gets too hot, and when it gets too hot, there's no availability out there. So today I'm going to teach you how to do that. So, page number 1, credit potholes on the road to close. How many potholes do we see before a customer is closing? How many times have we seen a client go and get another credit card? How many times have we seen a client go and spend more money? So when they come to our firm, right, we help them and tell them what can happen if they make those mistakes. They may have a clear pathway, but by having those potholes, and you be detrimental. We always advise our clients and our realtors and the mortgage professionals that if your client wants to close within a 6-month period, you need to start acting and reacting right now with their credit and with their finances. Because it takes time to cycle for it. You pay on a credit card. For it to post on the credit and the credit score to go up, it takes 30 days. It's a 30-day cycle. So most people think I pay today, tomorrow's going to reflect. It does not work like that. Unless you have a rapid restore in your firm, and you can do that in expedites. But we don't want to give that leeway to the clients so much that if they ain't know, you know what, I have time. No. You got to put the pressure on them, and by putting the pressure, it's giving them knowledge. That's how you put pressure. Not that you got to do this. You know, it's like, if we're going to do this, this is the best way how things are going to happen. So knowledge is key. So the 90-day approval, the credit repair, the credit reestablishing needs to happen pay, start to pay. How smooth is your road to success? You see there the second page is a credit score scale. You see there from excellent and 850 credit score and very bad to a 350. Now, ladies and gentlemen, we all know this, we're professionals in the mortgage and real estate. But we are also consumers. Don't forget that. We're also want to buy items. We know that the higher credit score, the better the financing terms is going to be for us. It's going to be for your clients. The better the rates, the more they can purchase. The more they can purchase, the more they can save. Everything's about savings. We don't want our clients to pay more. And you know how great it is when you speak to your clients about savings, not just getting them proof. Like, Mr. Customer, you know, this house, when you buy this, that's how much you're actually saving because your interest rate is much better. Now that client will always remember you. Because you are not just an order taker, you're actually a consultant. And that's the way that we should be consultants. And help our clients achieve the best way possible. So smoother roads, it was bigger, faster, deals. What are potholes? Potholes are any issue that will prevent your clients from getting approved. So we have the pre-approval, but how can we get them approved? Right? But the great thing is, potholes can be fixed. That's the great thing. So they don't have to be there forever. Remember, ladies and gentlemen, a negative item on your credit report, if you don't get that fixed, it stays there for 7 years. But we can get it fixed. We can fix those potholes. So people think, you know what, my credit is poor. I'm just going to sit there for 7 years and then things just happen. No, we actually can be proactive about items and get moving, get working, because if not, then we're missing out on opportunities or we're going to be paying more for those items. So I put there potholes, big, little, big, and craters. So we're going to talk about that right now. Patchy potholes. A lot of companies that do what I do, they do a great job in fixing the credit. They do. So fixing the credit, you see there, is only 35% of your credit. So you see the credit score formula is only 35%. What happens to the other percentage? They don't know how to work this formula. I've done extensive studies on this formula. I've had 21 years of experience with that formula. So if the customer does not have credit lines, a great way to increase their credit is to help them get a new line of credit. Pay down some debt. Do not close those old credit cards that you think are junk credit cards. Today I had a meeting with a client at 10 a.m. He had a credit card that his credit limit is $500. He said, you know what, Chris, I'm going to close it. And I told him, I'm like, are you crazy? He goes, why? It's $500. I have other credit cards that are $20,000, $25,000, you know. I mean, if you close that, the credit history, you've been with that credit card for 20 years. You close that, and you close the age of credit history. Think about credit history like a friend. And I'll give you a great example. I told Robert Lewis for 10 years. Right? There's things that I can ask him that I can ask many of you guys. Right? So that's credit history. You want to preserve those good friends. Now, if you don't preserve those good friends, they will close you. So if you don't use that credit card a little bit, it will close you. Now, a great tip, ladies and gentlemen. Do not buy something that you cannot pay off the next month. So, if you have a friend that you want to go out with, buy coffee or beer, you need that. Because if not, then you're carrying debt. And debt will hurt you because now you're paying interest on that debt. Right? And then debt to available credit. So if you have too much debt, you lose 30% of your credit score. So when I look at a credit report, when you guys guys send me a client and you send me a credit report, or I pull a credit report for them, I start analyzing the pros that they have on the credit and the cons. The cons, we work on the problems. The pros, we highlight them for them so they can expedite and move quicker. Craters. You go to the next page. These are items or severe items. Remember, we're talking about getting your clients approved quick. So these items are bankruptcies, foreclosures, possessions, and judgments. These are very tough things to remove from the credit report. The way we work is that we work under the Fair Credit Report Act law to be able to tackle these situations. So everything that we do is by the law and under the law, and that's why everything is permanent. Once we win the case, let's say somebody has a bankruptcy, once we win that case and we're able to eliminate it from the report, it's eliminated permanently from the report. Because we get a letter from the credit bureau stating this item has been deleted. But that does not take a month or two. That's a very extensive legal procedure there. But don't give up on those clients though. Because if you don't give up on those clients, those are the clients that are going to continue to fill up your pipeline. Remember, as realtors and mortgage professionals, we need a pipeline to be always flowing. So those clients that have this situation, we can still help them, and in probably 6 months or later, they'll be ready for the purchase. So you need to put it up your pipeline. You see here the next page, that's a testimony from a client that had a crater. If you guys have a couple of minutes, you guys could read that. You actually go into my Google page and read that testimonial there. So you see here, that gentleman was at a 590 credit score. And within 1 year, we got to an 800 credit score. That's not just by fixing the problems, also by including the positive items that he needed, that they were not there before. And also protecting him so he doesn't get back against the same situation. I do a lot of work with professional teams. And I always tell them, we need to put the offensive line first. It doesn't matter how great of a quarterback you are. I don't care if you're medical staff or you have all the weapons, right, to score. If the O-line's not there, you can't throw. So we got to protect the clients, and I put them in a financial software that showcases them how much money they have coming in, how much money is leaving, where their money is going, so they're not losing money, right? So now they're able to save money for their down payment. Now they're able to save money and get out of debt. So that's it. Extensive purpose business. The hidden credit. These are clients that have a lot of big potholes, that have a lot of late payments. And late payments are sometimes a pattern of they're not good with money. Sometimes they're a pattern of they lost their job, or they had a medical emergency in the family, or sometimes they have too many credit cards open. And how can they remember to make payments on all those credit cards? Right? The more credit cards you have, the more balls you're juggling, right? You have to remember. If one of your clients or yourself, you miss one payment, you're losing between 60 to 100 points on your credit. 60 to 100 from 1 month to the other. So you can have that client qualifying, you have the client there ready, and you start paying. They're done. So when they come to us to teach them, hey, I don't need payments on this. I'll give you guys a gigantic tip. Minimum credit cards that you should have open in your credit report so you can get the maximum credit score is 3. Minimum. Right? You need to have that combination. And they cannot be from the same bank. They cannot be Bank of America, Bank of America, Bank of America. Chase. It has to be Bank of America, Chase, SunTrust. You need to show different friends that like you, right? It cannot just be this table says great things about me, that's bias. It could be my whole family here, you know what I mean? Because it's not good. You need to have multiple friends saying good things about you. The more friends say good things about you, the more credible and stronger you are. Now, you do not want to have too many friends. Remember your mother says, you know, one hand, right? Literally, you want to have maximum 5 credit cards.
Yeah.
Nice.
Chris, is that like retail cards as well?
So the way I like to structure is if you're gonna have the maximum 5 credit cards, you know, 1 mortgage, 1 auto. You have 7 things revolving on your credit. That means that you can manage it, you can be on top of it, you can see how things are being, you know, handled and managed. You do not have to make a payment on your credit cards when your credit card statements come in, so you know. Because they want to trick you with that.
What is
They
it?
want to say that again. You don't have to make a payment only when your credit card statement comes in. They want to trick you with that. They want to give you 30 days of you spending. What I do personally is every Saturday I sit down, get a cup of coffee, I review what I spent. Sometimes my eyes, oh, what here? You know, pump the brakes real hard. Or sometimes I have myself in the back of my car. That was pretty good. You know, you did pretty well. You know, bringing lunch from the house. You know, save people a couple, maybe $60. You know, that's pretty good. You know, that would be for gas. So it matters. We need to start setting up patterns. Okay, right? But we can fix those things. We can fix those bad decisions. We can also help them not act out of emotions. What I see a lot, and I know realtors and mortgage brokers here, you guys see this also with your client. They're about to close their home. And they go and buy furniture before they close on the house. They go and get a new credit card, right? A new inquiry, a new debt. When they go and purchase a new automobile because they want the new car in the driveway. I've seen it. No. We teach them. You're going to sit up until that closes. Another great tip you guys can give your clients is tell them 60 days before closing, only use your debit card. You gotta want a debit card dies. Because if not, what happens is the clients will start using their credit card think, I'm gonna make a payment, it's gonna be okay, and now they're playing with fire. Some people can play with fire, you know how to play with that game. But most of us do not know how to do it. If you will get burned, they will have a higher debt to credit ratio, and their credit score will drop. So if you tell them 60 days before closing, do not use your credit card, stay put. You guys are going to guarantee that as the day of closing, when you pull credit, you're going to be as good or even better than what you have. So this is the coaching that we give our clients. You go to the next page there, that's a customer that had a big credit, another testimony. So this is a client that we helped out and had here in Florida, helping get his first house, and now he just purchased his second home. He has some creditors, right? He developed some late payments when he moved up to North Carolina. He had to help him again and fix a lot of those creditors that he had. Big problems. These right here are the clients that we can work with at 36 months that we can get you 60 points or more. So if you have a credit report that you're seeing that they're 60 points away from qualifying, and they have late payments, collection accounts, or charge-offs, that is something that we can speed up a month quick. Right? That also includes medical collections. Remember, medical collections are not supposed to go on the credit report, but they put them on the credit report. So those are the problems that we can fix. So 60 points or more in 36 months. Go to the next meeting. That's another client that had a testimonial that had those topics. Those big topics. This guy's such a great client. I can't tell you how great of a client he is. He's actually is one of the senior guys in Chase Bank. He just got thrown some curveballs, you know? He didn't know how to handle that. And actually, it was such an honor for him to send me that testimonial because of where he works, what he does. And he says, you know what? You set up things that even though in my position at the bank, I did not know. Remember, sometimes we have these positions and we're just told what to do, what to say. Sometimes we don't even understand our own metrics. But when we understand them, we can accelerate a lot better. Now, the little potholes. These are my favorite. No positive reporting. Short credit history. Few accounts or high utilization. That means about 100 to 140 points more in 3 months. I have a client right now that you just contacted me, just send me the payment right now. He told me when he was on the phone, he's like, Chris, I have been off the radar for about 10 years. I said, how can that be? This is my credit report. Literally, when I pulled the credit report, he's 55 years old. He has nothing. He's a ghost. And they now want to ask where he was. For that time for him, I could just use my imagination where he was. But now he hired us to help him build his credit correctly. So now we're going to set him up with the right credit card. So I have banks over here that even if the customer has bad credit or the customer has no credit, they're able to get him credit cards the right way and use them the right way. I also have banks that do the refinance for automobiles. So remember what I said that I was part of my first job was the automotive. I could look at a monthly payment and the balance, and I just calculate the interest rate of that automobile. If I see that the interest rate is high, we can work on the credit and I can help them refinance the automobile at a lower rate. And now they're going to save money. You know, the monthly payment, but the DTI now just got a whole lot better, and now they can qualify quicker or for something nicer, bigger that they may want. So these guys are great. That's 3 months in and out. And if you look at the testimonial, that was a client that definitely had those little prayers. It's amazing. He says it there. In 3 months, I got 100 points in just 3 months. Now, some powerful patches. You guys have clients that need just some quick patches that you may not need my assistance with. Secure credit cards, they help out a lot. Okay? Secure credit cards are those prepaid credit cards. Now, if the customer opens that up, they cannot use it, right? It's almost like a savings account. It's almost like a savings account. Open their account, no, don't use it. It's going to help them out. Piggyback. If they piggyback somebody's credit that is good, they're going to inherit all the positive things from that client. So that would be the and also, paying down debt. Paying down debt helps out with credit so much that one of my taglines is that debt is the killer of dreams. Whatever dreams you have, debt will kill you. Because if you have so much debt, you're so bad you can maneuver, right? No more recruiters, you're taking time off. So lower down the debt. These are great strategic approach that you can teach your clients that they can do and get there. But like anything in life, guys, every situation is different, every client is different. When we get a credit report, we analyze the client's needs and the client's wishes. We do not take on every single client. It has to be someone that we feel comfortable with, and we can help them out in a time frame, so that they're going to be able to do the job correctly. We have different programs. This program right here, guys, is a 3-month program. If you're in the little potholes type of program, or some of the patches, we have a program at just $350. It will be with me for 3 months. I'll be able to see the credit report, I'll be able to advise them, and we will check in with that client every 45 days for the 3 months, just to make sure that they're doing things the right way. Now, if they have those larger potholes, those craters, we have a different program for them that's a year long, right? It's a lot more money. It's a lot more money, but for your clients that are qualifying, that are approving, that you say, you know what? They may need $350 advice, somebody to keep in touch with them, almost like babysitting, right? But babysitting, we're giving them new advice. We're offering that right now. And that was strengthening their credit. So, if you're good at one of the last pages, you will see our good friend Robert Riagos. Our testimonial. And Vito Delgado, I know you guys know them. I've had the honor to represent both of them.
Yeah.
So they're amazing, amazing people. That just tells you that, you know, curveballs can happen 21 times. Curveballs can happen, but we're here to help you out. Like I said before, 21 years of service. And then the last one, this is really cool for many of you guys that do not know another aspect of me. I deal with the NFL. I'm a credit advisor for the NFL for 14 of the NFL teams. If you guys are a Miami Dolphins fan, you'll recognize Philip Weaver. He was here before with the Dolphins. And then if you like MMA, I will also represent the MMA. And that's one of my clients, Colston. And he's also extremely amazing. So these are gentlemen that I helped out. And the last one there is my contact. You go over to me, Facebook, Twitter, Instagram. You have my business cards there. You have my email. You have my direct cell phone. And at this time, I want to open it up to questions. What questions do you guys have for me?
How do you remove statements?
Everything is a legal investigation. So the document, the court documents, the court, they need to have the document. In the document, they need to have several legal documents inside there. If they did not record the document the right way, they cannot prove it, they cannot hold that document there. Because the bankruptcies, these are for 10 years, you do nothing about it. That's chapter 7. I can work on chapter 13, but after it gets discharged.
Well, the conflict may occur when some of the banks pull a fraud report on the back end and they appear again
On the bankruptcies,
on foreclosure specifically.
that's a great one that you said that, I'm glad you said that. So they have those backends. So when I work on it, when it's 40, I go back to student experience. I'm not on that. So when I get a client that has foreclosure, I tell them, you cannot do anything until 3 years or 4 years right after you foreclose. So I tell them, I can eliminate it from the credit report, but you know you're going to have this problem on the back end.
Yeah.
And I advise them, I let them know.
Yeah, because I have seen that where the foreclosure does not appear on the credit report, but then it does come up on the back end.
So that's a lot of the interviews that I have with clients. So when I see the credit report, I say, what happened here? And this is a short sale foreclosure. If that's it, and I say, no. You know that this is what's going to happen, and you're not going to be able to get this. You know, and I tell them, talk to your real estate agent or your mortgage professional so they also know and you can prepare. Because at that time, they could just grant a year or 2. We can work on the credit, but that's no longer there, right? That term, the 3 years and 4 years, then you can apply right away.
Client that had 74, 64, and 5 experience. The big difference was the only student loans on experience and this other one. I'm here
So they should be reporting, but part of there's a glitch in the system and they did not, right? That happens a lot from small creditors that they don't have enough money to do all three, right? Because you have to pay a fee. So report all 3. But that can be just a glitch in the system there. So those criminals that are permanent, they have payments. So the next one is not going That has happened a lot. Also, ladies and gentlemen, if you